Good morning, friends. Welcome to the point. I hope all of you are doing well and keeping well with your studies and are properly revising the previously done videos. Talking about the today's topic is about taxation related topic, which is tax deduction at source. In this video, we will discuss about what is the concept called tax deduction at source and the entities who are liable to pay tax via this method. So we'll start with the introduction. What is TDS or tax deduction at source? Under tax deduction at source, the income is taxed or collected at the site of its creation. For an example, if I have a firm who is availing services from an architect, okay, now when the site of creation of income is my firm, which will release the payment to the architect once the services have been taken or received from the architect, and the tax will be deducted here only while payment is being released to the architect. So let's suppose 10,000 is the payment that the architect is charging for providing the services. Now when my firm will release this payment to this architect, they will automatically collect the tax here itself at the prevailing rate and then release the rest of the payment to the architect. Now the tax that my firm has collected, or sorry, the first it is deducted or collected here, will be deposited to the central government. Now let's suppose the prevailing rate of TDS is 10%. So my firm, while releasing the payment, will deduct 10% of 10,000, that is 1,000 rupees, and will release rest, that is 9,000 rupees to the architect. Now this 1,000 rupees will directly go to the central government at the end of the year. The collected tax is then deposited to the central government. As I've told you, tax deducted at source was introduced to bring more and more people under the tax ambit, which were conventionally used to skip or escape the tax. So whenever a new thing is launched by the central government or any government, there is definitely a motive behind that, and the motive behind introducing tax deduction at source is that to increase the tax base, also bring more and more people under the tax ambit which used to initially skip or escape paying the tax. So now let's suppose this architect is an individual and is providing services to 5 people, okay, to 5 firm individually or 5 any companies, it could be anything. Now what he used to do is, earlier, since he used to receive payment, he never used to pay tax over it, because earlier what was more prevalent, it was sales tax and value added tax. So but in case of services, when any service is provided by a person, so a tax would be collected at the site of creation, and that tax is called tax deduction at source. It is the responsibility of the entity that makes the payment to a particular individual or firm to deduct the tax at the source. Here the liability to deduct the tax is of the firm or the person who is releasing or making the payment, or from where the payment is flowing. So A is not responsible for deducting the tax, it is the firm which is releasing or making the payment. Moving on to the next slide, which talks about the provisions related to TDS. So the first one is, TDS operates on the principle that any individual making a given form of payment to any individual shall deduct the tax at the origin at the rate prescribed in the Income Tax Act 1961 and deposit it to the government account. As I've discussed earlier in the previous slide, it is the responsibility of the firm releasing or making the payment at the rate which is currently prevailing as per the Income Tax Act, and will deposit the amount in with the government. If the firm is not depositing the amount with the government, the whole purpose of introducing TDS stands defeated, because the sole purpose of introducing TDS was to increase the tax base and tax collection. So it is necessary for the firms to deposit the money with the central government. The individual must make the payment to deduct the tax and deposit the same to the government. So in order to deduct the tax, first the payment should be released. Otherwise this is not possible that just the tax is collected and no payment is being made to the service providers. No, this should not be there. It is only when the payment is being released to the service provider, then only the tax will be deducted. The deductor is an individual or an organization that is qualified to deduct the taxes before the payment has been made. So the deductor should be qualified to deduct the tax before the payment has been made. It is not that any person who is disqualified can also deduct. No, the person or the organization should be qualified to deduct the tax. the next point is the deductee is the individual who is responsible for paying tax. So the deductee should fall under the tax ambit. For example, your organization is providing services, or your organization has hired some domestic help or labor to provide some services. So it is not that the organization or the firm will collect TDS to the payment or the petty payments made to them. Why? Because those people does not fall under the category where they should pay income tax or any sort of tax. Those people are works under the unorganized sector, and they are not liable to pay the taxes because they do not fall under such category where they could pay the income tax. So a deductee should be one who is responsible for paying tax. And the last point is form 26AS. Now that is the form that has to be filled whenever a TDS is collected and deposited, and it is in the name or the PAN card of the person from whom the payment has been deducted. Here in this case, my firm will fill up the form 26AS in the name of the person. Also they can deposit in the as per the PAN number of the individual in a given financial year. So these were the major provisions that you need to know regarding TDS. Also, just to mention that PAN number is permanent account number, which is issued by the tax department. So we have so far covered the major provisions relating to this TDS concept, and now this is all for the today's video. Thank you so much for your patience listening.